Hello and welcome to Crux Investor. We caught up earlier today with John Dorwood, CEO of Rox Gold. We talked through the success of last year and how you go about building a multi-jurisdictional, multi-asset company. If you want our thoughts on that conversation and do some of those topics and the company itself, you can find that at cruxinvestor.com/club. You can also find detailed company reports there and analysis. There's commentary from experts from around the world on a variety of companies and commodities, which you may find interesting, plus summaries of other interviews that we've done to save you some time. There are training courses on there to help you with your diligence process. And of course, you could go and join our thriving community of intelligent investors sharing their thoughts and ideas with each other in a nice friendly way, free from abuse, trolling, and judgment. Wouldn't that be nice? So check it out. I think you'll like it at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like. We'd appreciate that. Leave your thoughts below. We get back to absolutely everyone. And of course, if you want to see precisely what we talked about today, take a look in the description below. John, how you doing, sir?
Very well, thank you. Good to speak again.
I know. Long time. Long time. Are you well? Where are you hiding out?
I'm hiding out down in Melbourne, where it's not too bad. It's obviously been an eventful year, but I think, on balance, Melbourne hasn't been too bad a place to be hiding out and trying to keep all the plates up in the air.
Yeah, and have you found that kind of managing people remotely? Was it always thus, or is it just you've had to work a little bit harder at it?
I've become slightly more proficient at Zoom. I must admit, if I had $1 for every time I launched into a brilliant point and had my mute button on, I probably wouldn't be working anymore. But apart from that,
right.
I'm still getting a little better. I haven't really mastered the background though, so I apologise for a fairly sort of perfunctory background here. I don't have a funky Rox Gold backdrop or a carefully curated bookcase or anything like that. So I apologise to your viewers.
I think that's wise. That's wise. We've had various people on here who've got a fine coif of hair, and they've done the whole presentation hairless because it just you just sort of lose the edges. Or the good news is, and for people like me, maybe I should employ it, is they look a lot thinner because you're losing the edge of their face. I think that's the way forward. Right.
Yes,
well,
unfortunately, a fine head of hair hasn't been been an asset of mine for a long time. Probably about when I joined the mining business.
Right. I know how you feel. Now we better talk about your business, Rox Gold, which had a pretty stellar year last year. So before we, before we do dive into that, why don't we give people a 1-minute overview of what it is that you are, and then we'll dive into the story.
Sure. So Rox Gold's a Canadian gold mining company listed on the TSX under the ticker ROXG. We discovered, built, and are operating the Yaramoko gold mine in Burkina Faso. And I think for a number of years we're a little bit of a one-trick pony. But the last sort of end of 2019 and certainly last year, I think we can make the case coherently that we've really evolved to become a much more dynamic beast. We now have, and I'm sure we'll get into it, a new project in Côte d'Ivoire, which is coming along the pike very quickly, and we just made a new discovery in Burkina Faso. So from being a bit of a one-trick pony, say at the start of 2019, as we start 2021, we're on the road, and I think we can make the case that we're heading towards being a 3-mine company, multi-jurisdictional. Our intention is we've been able to extend our flagship operation at Yaramoko and using the cash flow from Yaramoko to build out our portfolio. So in a nutshell, what we're trying to do is really provide our investors with accretive, non-dilutive growth. And I'll be happy to take you and your viewers through that story in more detail.
Beautiful, beautiful. I mean, I remember when we first talked, you're around $100 million. Do you remember those days? $100 million. You had one asset, short life of mine, high grade, in a jurisdiction which at the time was getting, the wrong sort of press in terms of some of the activities going on in the country. It was difficult times, but what I was intrigued by was the business plan back then, what you were hoping to do. So if you don't mind, so remind us, because you've described the type of company that you said you would be. You've kind of got there, but back then it was tough going. So maybe just remind us how this thing started off and some of the problems you were dealing with, if you don't mind.
Sure. So is often the case for me. It's a bit of a question of timing, and our timing really wasn't ideal for Yaramoko. We probably would have been better finding it about 4 or 5 years later, but such as it is, and that's the hand we were dealt. So we built the project. So the project was discovered in 2011, and we took over the company through a proxy contest in 2012, and it really went through the traditional sort of milestones of an exploration company turning into a producer. So you have that question, do you build it out? Do you raise the capital and build the project, or do you put yourself on the block and sell it? So we went through all those iterations. I'd previously been at Frontier Gold, and we'd been taken over by Newmont. So the sale process was a fine outcome for me, as was the building it, which we'd done as well. So we went through those sort of combinations and permutations. As it ended up, we felt that the best course of action was to build the project. And I think, that went very well for us. I mean, it was for a single asset company, a junior developer, it's probably the most ideal asset you could have had. As you identified, it was high grade. It was relatively modest capex up front, around $120 million. The grade that we saw, the cost profile that we had, made it, eminently financeable, and we were able to raise equity and debt as and when we needed it. We attracted, good, strong, solid shareholders. Appian Capital is one of our long-term shareholders, a PE fund out of London. So we were able to attract that patient long-term capital, put the debt together, put the team together, and build the project. And really, the project, to be honest, has never missed a beat. And that's, I think, a credit to the operating team, the quality of the asset, etc. So it's really been a really good small mine. And, you identify the question about mine life. And I think last year, and I think we did a lot of things went very well for us last year. And one of those was to really have quite a catalytic reserve and resource update. And what we were able to do is, after operating the gold mine for 6 years, producing nearly 700,000 ounces, we're able to have the same measured and indicated resource base, or slightly higher measured and indicated resource base than when we started. So what we believe Yaramoko is, and the way we look at it, is one of those exceptionally good underground gold mines that what you see in terms of mine life on paper is not what you get. And I can bore you to tears as well as any other mining guy about stories of mines that had 3 or 4 year reserves and have run for 20, 30 years. So, and we think that Yaramoko will follow a similar vein. So that's sort of, for us, we had our growth ambitions, but I think one of our sort of tactics was to really try and remove obstacles for people to own the story. First and foremost, mine life was a big one, and we spent a lot of time over the last 6 or 7 years talking about mine lives. And I think we're able to sort of point to a track record now of Yaramoko of being able to extend that. And then the next sort of weakness was single asset, single jurisdiction. You're right, we're in Burkina Faso. It does get headlines from time to time. We've found it to be an excellent jurisdiction to work in. I mean, we've never missed a day's production through government or community action. So the perception and the reality are a little different, but at the end of the day, it's what people believe, and that's what's important. So being able to move to being a multi-jurisdictional mining company now is, I think, is hopefully one of the last hurdles for people to get over and really say, okay, let's have a good look at Roxgold. And what do I get for my investment dollar if I put it into Roxgold?
Okay, what I'm trying to get out of you is some of the lessons learned in terms of operating in West Africa. West Africa, it can be tough. Mining can be tough generally, but West Africa can be, can throw up a few surprises. So I'm trying to say to people, look, you've had issues in terms of life. It's one of the biggest questions that have been sent to us. We've had literally hundreds of questions sent in, and it's like, how do they continue to extend the life of mine? There reaches a point of no return eventually, right? So what are you doing to make sure that you're still going to be able to be operating in country 10 years from now?
Yeah, so I think so on the books at the moment we have an 8-year mine life, and that's an 8-year in reserves mine life, and then we have a decent inferred component on top of that. So first and foremost, the target will be to convert that inferred to indicated and measured, and that's really an infill drilling exercise, and we've started to do that at the moment. So we have 3 underground drill rigs turning as we speak from about 600 metres below surface. The main aim of that program is to infill, grade control drill, as well as a little bit of inferred conversion. Next year, 2022, we have another drilling platform about 750 metres below surface. And the idea there is to continue to extend the mine at depth. So we think that over the next 18 months to 24 months, we'll be able to continue to test the down plunge extent. And when you've got a double-digit grade resource, you can mine it for a long way. So, I mean, people say, oh, what's the economic limit of trucking at Yaramoko? And it's probably 2,000 metres, and we're mining around 500 to 600 at the moment. So it's not a limiting factor. I mean, if you stood outside the portal at Yaramoko, especially at the 55 zone, and counted the trucks, you'd die of boredom. I mean, it just doesn't have to move that much material to get the amount of gold that we produce because of the high grade nature, and that sort of flows all the way through the economics. Bagasse South is another open area that's open for expansion. What we did at Yaramoko this year, which was a little unique for us, is we wrapped reserves around an open pit concept at 55 zone. So at the end of the 55 zone underground mine life, and whenever that will be, and that could be 15, 20 years from now, everything will fall into a big open pit. There's over 200,000 ounces of very high grade, around 5 to 6 gram open pittable material. Once we've done it, we take out our ventilation, etc. So there's no coming back from it. So we really want to make sure that we've extended the mine at depth as far as we can. And I think the same can be probably done at Bagasse South. So that's a focus for some drilling that's underway at the moment. So that'll again be hopefully another incremental add-on. So in 4 years' time, when we finish up at Bagasse South on the current plan, we'll hopefully be able to have a couple of years of open pit. We're doing a lot of regional work, taking what we've learned from the open pit study at 55 zone and extending that. So I think we'll be able to come back to our investors and say, here's a list of surface targets that we've drilled up, some of which may or may not have deep roots. So that's quite an interesting package, and we haven't talked a lot about that. But I think there's very much an opportunity for us, not just relying on extending the 55 zone at depth, and it's very much alive and well, and we'll start to have some drill results coming from there. But we've also got this near surface shallow targeting program that's starting to bear fruit as well. So look, I understand people's perspective on Yaramoko. We've talked about it with a lot of investors over the years. There is no imminent finish to Yaramoko. It will be a 15+ year mine life, and I have very little doubt about that.
Okay, so in terms of number of ounces that are coming out of the ground will continue. The economics may change over time, just by dint of, you go down further, costs go up, and eventually there's, but I haven't appreciated, is the potential of an open pit. But again, you work out the economics and advise people as we go forward. So the question of economics versus and life of mine, as far as you're concerned, is some ways out before any sort of big decisions need to be made.
Yeah, look, it probably is to a certain extent going to be an economic end of mine life as opposed to a run out of ore mine life. I mean, I think these sort of shear zone hosted gold deposits tend to have very deep roots, so it's likely that the gold bearing system will extend for many kilometres. Whether it extends at the grade and width that's economic remains to be seen, but so far so good. And I mean, one of the things that we're doing at the moment as part of our underground drilling program is testing the footwall structures. I mean, they've not been tested, so everything has really been drilled from the hanging wall side. So we're going to drive through that and start to drill into the footwall to see if there are parallel zones. We're drilling on the other side of the Yaramoko shear, which has been interpreted as cutting off mineralisation, but there's really no necessary reason for that being the case. So now that we're down nice and close to it, we can test over the other side of it. So I think, look, I mean, Yaramoko and the 55 zone in particular is starting to have it has a total endowment now of mined and M&I of about 1.6 million ounces. And we're looking at, again, an average grade of around 13 to 14 grams of that endowment. So those systems are very powerful systems. They're very rich systems. So given the nature of how this deposit was put in place and the fluid flows that sort of pumped through the system to put it in place, it's entirely possible and very plausible that there will be additional structures. Now, whether they're as good as the 55 zone or better or worse or whatever remains to be seen. But it is, I think, highly unlikely, in my slightly biased opinion, that there won't be other gold deposits found around Yaramoko.
Okay, great. Now, you've also got Basura. I know everyone wants to talk about Seguela, and we will talk about Seguela because it's very, very exciting. Some of the numbers coming out there are insane. But Basura, just in terms of just sticking with Burkina Faso for now, what are you seeing there, and is it encouraging you?
Oh, absolutely. So Basura, just for your viewers, for background, is a homegrown discovery by Roxgold. It's something we pegged about 4 years ago. It was prospective at the southern end of the Houndé Belt. So basically, at the end of the Houndé Belt in Burkina Faso and up to the border of Côte d'Ivoire at the southern end. And look, I mean, we did some fairly high-level sort of field work and reconnaissance drilling over recent years and really got serious about it in the second half of 2018, largely under the stewardship of Paul Whedon, our VPX, who joined around that time, and his in-country team, and really gave it a good crack. And it's really delivered the goods. I mean, what it is, and it's a little different to what we typically have seen in the past. I mean, Yaramoko is an extremely high-grade sort of discrete set of deposits. Seguela, again, very high-grade set of discrete deposits. I think it's actually going to be a much bigger project ultimately than Yaramoko, but time will tell, but it's certainly on a growth trajectory that would indicate that. I think what we have at Basura is something that's probably a little more sort of typical of your West African open pit projects, where you've got multiple structures, parallel zones over multiple kilometres. So the amount of real estate that we've identified at Basura is, gold bearing and ore grading, and the amount of artisanal workings that we see is much, much more extensive than any of our other projects. And what that allows us to do is to really start to noodle out what this could possibly be. So we think that we'll be able to wrap a resource around Foufora and Kalgoorlie, the two main project areas, later this year. So before the end of the year, a maiden resource for Basura. And I think that'll just be the first step. And I think from there, we'll look to drill this out. So I think we have several years of drilling at Basura and hopefully ultimately delivering multi-million ounce deposit that can be our third gold mine. With Yaramoko and Seguela in production, we could tackle something pretty decent sized, and that's hopefully where it ends up. I mean, it's early days. But if you look at the widths that we're hitting, the grades that we're hitting at both Foufora and Kalgoorlie, the number of mineralised structures, the amount of artisanal workings that are yet to be tested, and the hit rate of ore grade intercepts under the artisanal workings that we have tested, then it looks very good. I think we've sort of crossed the Rubicon as to our mind. I think we're very much on the cusp of being able to make that qualitative assessment that this will be a gold mine.
It'll be a gold mine. It'll be your gold mine, because your intention is to build up multi-jurisdictional, multi-mine operation. Yeah.
So I think we've talked about this in the past. I mean, we like the idea of accretive investments and not diluting our shareholders. So we have less shares on issue today than we did 3 or 4 years ago because we've had some share buybacks. I think what we don't want to do is go down the sort of, what's been a fairly well-trodden path of delivering growth for growth's sake and diluting shareholders along the way. So, and I think Seguela is an excellent opportunity for us to demonstrate that, insofar as, we're not going to raise money to build Seguela. We're going to build it from retained earnings, our cash at bank, additional borrowings that we're looking to put in place. So we won't be putting a bought deal out to fund Seguela, and we will more than double our reserves, more than double our production, cash flow and earnings per share. Will comfortably more than double on the same number of shares. So that should be very positive for our share price.
Should be very positive for the share price, absolutely. So how much money are you allocating to Côte d'Ivoire? Because some of the results coming out of there are spectacular. Talk us through guidance for 2021, for instance? Because I think now would be a good time to talk about Seguela, because most of the questions that came in were like talking about the grades and how you're going to tackle it, and will you abandon Burkina Faso in favour of this What's the plan?
It's interesting. So we can certainly, I'll talk a little bit about, guidance, and then we can talk a little bit about the plan of how we're going to develop the project. So guidance for next year is quite similar to this year. We're around 120 to 130,000 ounces of gold produced. That was our same range as we had last year. We came in at just over 133,000 ounces. Our all-in sustaining cost runs from about $895 to $975, so sort of low to mid 900s, so a little bit less than what we did this year. We've got a little bit less sustaining capital at Yaramoko. And on a sort of a growth spend, we're looking at around $15 to $20 million, which again is the same sort of number we had last year. We edged that up based on success at Séguéla and Basura. Séguéla was higher because we discovered Kula, and we did a drill out, an infill program, which is necessarily more expensive generally. So hopefully, the balance at Séguéla now, and we'll talk more about that, shifts to more testing targets, which is what we were doing when we discovered Kula. So that number could go up, but that's a pretty good, sort of benchmark for us now. So 120 to 130,000 ounces of production, all in sustaining cost, around that sort of early to mid 900s. So, close to a $900 to $1,000 margin, and $15 to $20 million across the portfolio. Séguéla, Basura, Yaramoko, with Séguéla not surprisingly taking the lion's share. So that's what the year 2021 looks like for us, and I think we've been pretty confident that that's in hand, and we should be able to deliver that. Subject to COVID not having an undue change in its impact, etc. In terms of how do we look to manage that, we are very keen and very committed to becoming a multi-mine, multi-jurisdiction company. So we are comfortable working in Francophone West Africa. Paul Criddle and I built Sabodala back in 2008, 2007, 2008. And it's interesting. So a number of the people we worked with, a number of the Senegalese people we worked with at Mineral Deposits when we built Sabodala are now working for us and have been working for us for 6 or 7 years at Yaramoko. They are starting to move down to Séguéla as part of our sort of construction team, and will be part of our operational readiness team. So we've had some of our employees now that we've worked with for 15 years. And what that enables just for us as a business, that we can start to offer those same career paths to our Burkinabe employees. And also some of our expatriate employees have now got a genuine career path at Roxgold. So our retention ability stays very high. So I think, with our structure under Paul, with our COO leading the operations and the development team, David Whittle, who's running Yaramoko for us and will help us out at Séguéla. We've really got a lot of bench strength now in both ops and development. Our Eric Breton is our general manager, external relations. He's now relocated to Abidjan to sort of guide that, and he's number 2. The Burkinabe has been promoted to be our sort of face of Roxgold in Burkina. So from a personal, development of our people perspective, and also, for our host government, we can really start to show that we are walking the walk. We are paying our taxes, our royalties, and really helping that transfer of knowledge and developing our people. And, some of them will start to be working as expats in the coming years as well.
Yeah, it's interesting to me. Sorry, there's such a small thing, but it just shows a lot. In terms of ESG, it's becoming such an important part for institutions to be able to, it's more than a tick box exercise now. It's got to be meaningful. So I know you saw something about your investments into local community, planting trees and, and working with the community, employing 91% of your employees are local, which is all good stuff. How's it going out there? Because we talk to West African companies all the time, and I think 18 months ago, even a year ago, they had a whole bunch of different issues around terrorist activity. Now it's COVID, so you've got to manage these small fires, as it were. Relations in country, fine. You're finding that the government is being helpful to your your aspirations at Basura, for instance, or does it just take a long time?
No, look, I think to be honest, and I think this goes to the nub of the question about political risk and jurisdictions. I mean, you can get your gold mine built faster in a number of West African countries, and I'm saying Burkina, Cote d'Ivoire, Mali, Senegal, faster than you will in pretty much any other jurisdiction. And that's not because they're cutting ties. I mean, basically all of these projects are built by Western companies subject to Western rules. They're financed by Western banks. Their investors have their own ESG mandates, etc. So you're sort of building it to a high standard, but you're not being made to jump through the amount of red tape or green tape necessarily that you might in a lot of other jurisdictions, which can be a bit of a tick-the-box exercise. So if you're in Burkina or Cote d'Ivoire, this has certainly been our experience, that the interest from the government right down to the local communities for that foreign investment is very tangible. I mean, it means a lot for a Burkina government, Burkina Faso, to have a new gold mine enter the formal economy, pay taxes, pay their employees' taxes, pay into the social security fund, have the resources for a COVID. I mean, we've been assisting the government and local communities with health, PPE for health professionals, etc. So, I think there is a compact between us and our hosts, and we're very mindful of that. And I think from being able to show them how much, the dollar flow, which is clearly important, no point in beating around the bush and denying it, but also the qualitative aspects of us putting our people first and starting to promote them. I mean, that's very important. And, it's important around the world and certainly the case there. So we're still very happy working where we are. I think on the security front, you mentioned that's clearly been an area of concern for a number of years now, and we sort of started to see the situation deteriorate to a certain degree, quite a few years ago, and have been gradually ratcheting up our response to that. We had elections in both countries at the end of last year in November and December. Typically, elections can be a little problematic. And there's a little bit of a bit of nervousness around them in both countries. And both countries were facing their own different issues. Burkina sort of on a security perspective, Cote d'Ivoire on sort of term limit perspective, and both went very well. So, we got through that. Preferably you wouldn't have them back up 1 month after the other, but that's what's happened. And now those elections are over for the next 5 years. So, I think people have their perspective on West Africa, and I understand that. But, the countries are all different, and the operating environment for investment has always been excellent, in my opinion.
Okay. Where I was going with that question is I was trying to work out how much control you have over timing, how much control the governments exert over you, because you're at that kind of tricky stage now. You want to be a mid-tier. You produced 133 ounces, slightly over it. Last year was a great year, and to get up to that 250, 300,000 ounce a year, you're going to have to go some, and you're also going to have to. Well, it depends what your timeline is. I guess we'll hear in a second. Things like Séguéla, you're going to have to pump a lot of money in there to work out what you've got, how you're going to tackle it, and and when you're going to aim for in terms of production to be able to allow you to become a mid-tier producer. So how much money are you going to be spending? How much control do you feel you're in? And so when you're talking to the market, give them a sense of timing on that.
Sure. So, I mean, we obviously try to focus on control the controllables that are within our control and sort of try and influence those that are outside of our control. And look, I mean, the governments, if we look at the governments, I mean, they're sovereign nations and they have control over their own borders and laws, etc. So COVID was a good example of that. I mean, for Burkina, where we were primarily operating, mining was designated as a critical industry, and that's due to its contribution to GDP, etc., and its ability to assist in some of these other qualitative aspects. And so we've always been able to, and we're always able to move our people around Burkina, even though they had restrictions on curfews and travel. So we were exempted from that. So I think that shows a maturity and a willingness to work cooperatively. So we're very, very grateful for that. So we're mindful that that's incumbent upon us to respect that and and manage our risks so that we don't expose any of our communities to an undue introduction of the virus, etc. So I think that's a good sort of current worked example of working through a challenge. And I mean, there are other countries that have taken a harder line and sort of basically, mining wasn't included in that, and there's been a lot of companies that had to shut their operations down. So I think that should give some people some comfort. I think in terms of how we're going to fund it and can we deploy that capital as and when we need to, I think we do have to be mindful that we are operating with a pandemic, but if the current operating situation continues and doesn't get worse, we are confident that we'll be able to deliver our feasibility study next quarter. So we would have delivered our feasibility study before the end of the year, but for the discovery of Kula. And if you find 300,000 ounces in an open pit at 8 grams, you're sort of encouraged to try and work that into your numbers. So that's what we've done. So that's kicked that out by 4 to 5 months. So you can expect to see the feasibility study. Significantly, the mining permit has already been awarded. So we have received our mining permit, our ESIA has been approved, and we're in advanced stages of negotiating the mining convention, so the fiscal stability arrangement. So that's looking good. So that's not really, we don't think that's on our critical path. So mining convention will come, feasibility study will be published. We're looking to finance the project, so we'd look to increase our debt facilities, and we're talking to a range of different counterparties about what that might look like. I think it will probably look relatively vanilla. We've had a very straightforward project finance facility for a number of years. That's what we built Yaramoko with. That's been converted from a restrictive project finance type facility to a more less restrictive corporate sort of debt arrangement. So I think we'll be able to enhance that probably to around the $150 million range. We have finished the year with about $62 million in cash at the end of 20. We're generating cash as we speak. We generate cash through 21, 22. So we're very comfortable that with that increased debt facility of $150 million, $60 million starting debt today and cash flow from Yaramoko, that we can be funded. And that's to my earlier point about we're not looking to raise any equity. I still don't think people actually believe me, but that is what we're going to do. We are not going to be raising equity. If we are, then something's gone wrong along the track.
Okay, so you are absolutely focused on per share growth. It's one of the things you mentioned earlier. So there's going to be no sacrifice over the next couple of years just to get Séguéla up and running. You're conscious that and you believe that you can get a fairly significant package put together and with vanilla terms, as you put it. By that I mean palatable.
Yes, we've scaled up our human resources. I mean, we've got our new sort of mining manager, our processing manager, our general manager at Yaramoko are all first class. I think we're looking to have them take some responsibility for Séguéla. Paul, our COO's got a number of mine builds under his belt. His 2IC was with us for Yaramoko. We've increased our technical services capacity, so we've got those departmental heads looking at some of those critical areas for us. So I think I don't want to sound overconfident, but I think we've all managed multi-mine companies in the past. We've built projects in this part of the world. We're much better financed than we were when we did Yaramoko, and the payback I think on Séguéla will be even quicker than what we saw at what we enjoyed at Yaramoko.
That was where I was going with this one, because just looking at the numbers, it's trying to understand companies trying to become mid-tier companies quite often make the mistake of plowing money back into the ground because they want to get things moving quickly. But you feel that because of your track record, that we don't have to go through that, and there will be this per share growth focus. So great. I want to hear this story more this year than we did last year, because it sounds like things are really starting to motor. I haven't talked about grades or drilling or any of that, because I imagine you've done And I see that you've done a lot of that over the past few months or your quarterlies. All the numbers look great. So let's just have a moment to indulge in some of the numbers that are coming out of Séguéla are, like I said, insane. I mean, you can't have expected it to be that good when you bought the asset.
No. And look, I'm certainly not going to say that. When we bought the asset, and I think we talked about this, so we closed on the asset in April of 2019. So we've owned the asset for about 21 months. What we bought from Newcrest was just over 400,000 ounces of inferred at 2.5 grams at Antenna. And that was the published resource from Newcrest. And the asset was a little orphaned within the Newcrest portfolio. They'd sold the Bonacro mine previously, so their attention was moving to the Americas. So they had this development, and it looked subscale. I think there's no point in beating around the bush.
Remind us how much you paid.
Ounces. $20 million, so $20 million cash, and there's an additional $10 million due upon first production. So basically what we did is we repaid Newcrest their investment. They'd spent about $20 million exploring at Séguéla. And, the interesting thing about Newcrest is that they have been a very successful exploration-driven company. They've found the majority of their gold mines. And what they'd done is when they'd had really early mover status when they came to Côte d'Ivoire back in, the early 2000s or mid-2000s. And they had they had a very large patch of Côte d'Ivoire. They've subsequently sort of curated that down. And that's what we bought over and above Séguéla. So we got a large regional package as well. But what we saw at Séguéla, getting back to your original question, sorry, I do get a little off topic sometimes. What we saw at Séguéla was the ability to grow the project. We thought that we could probably get our way to 800 to 1 million ounces over a few years. And for a company like us as a single asset, that would have been good business. And I don't think it set the world on fire. When we announced the acquisition, I'm pretty sure it didn't set too many hearts aflutter, and people didn't appreciate, it was a little underwhelming, but, you get on with it. You sort of work your way through these and you don't get too disappointed. Maybe cry yourself to sleep a little, but that's okay. So we had relatively modest expectations for it to be a winner. And then I think what happened is we started to go through the sort of the Newcrest exploration work and started to look at some of the targets that they just hadn't really got around to drilling, one of which was Ancien. And Ancien turned into 250,000 ounces at 6 grams, all within an open pit shell. And the effect that had on the economics of Antenna and some of the other deposits that we'd found was quite compelling. So we thought, this is probably getting ahead of what we'd hoped. So our sort of upside case was being exceeded. And then subsequently with the discovery of Koula, it's really blown over the top. So I think with Séguéla, we are eventually going to be looking at a multi-million ounce gold project in a series of pits, some of which likely to go underground because they've got insane grades. We had one of the headline holes was 14 metres at 46 grams last week at Koula. And if you go through the list, and I think this is always a test that I like, when you look at the headline numbers and you go, well, that's a nice couple of headline holes. How many holes were drilled and what were the results on the rest of them? And if you look at that press release, there are a number of holes that go well below, well outside the bullet points that would have been the headline numbers on another project. And I think that speaks to the consistency. These aren't artifacts. These are real high grade deposits that look like they've got deep roots down plunge. So that's why we're current programs to follow up to see if we can extend Ancien and Koula in the first instance into underground operations. So
no, it was interesting, going through the numbers and studying it, because it's a case of, sometimes you win, sometimes you lose with acquisitions, right? And I think in this case, it's fair to say you've come up trumps on this acquisition. I should say the headline component, companies, was just going through your press release for the last year, the amount of big, eye-grabbing grades on there, as you say, it's a trick employed by lots of companies. But when you get into the details, say it's just multiple numbers with big grades over big widths. It's very, very encouraging. It's got to change your mind about how you approach it, though, doesn't it? Every time some of these grades come back, you go, well, maybe we could allocate a little bit more money for drilling, because you want to understand the amount of metal in the ground, right?
Yeah, so I'm sure I'm probably not speaking out of school, but some of our board members look at our VPX as if he's a foie gras goose and just want to force feed him more money to find more gold. And he's a very sensible, very experienced operator, and he's wanting to make sure that we don't do our exploration necessarily with the drill bit. It's a planned, methodical process that we generate targets and we test them, and then if they come up trumps, we come back and infill. So all dreadfully boring, and when you're sort of drilling 600, 700, 800 gram ton meter intervals, you sort of want to get on with it. But I think it's paying off, and we've really matured in our exploration and our geological capacity. I mean, we're now able to really look at it as a portfolio, put some gates in place and some tests and some hurdles that things have got to get over, and try and maintain that sort of a little bit of dispassion towards it, so that you're not just chugging lots of money into lots of deep holes and drilling and praying. It's become quite planned, and so far so good.
Yeah, so far so very good. Look, John, brilliant updates. Wish we'd hopefully we'll speak more regularly during the course of this year. You're building something quite nice there, in the right way, and you're looking after the cash as well. So that's really good news. Stay in touch. Let us know how you get on this year. We'd be delighted to take that phone call.
No problems. Thanks very much. Great to have the opportunity to speak again.